Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This is where you get everything you need to know in 90 seconds at 9 o'clock, including news of fast falling spreads. But first, the American jobs report came in largely as expected, with good growth most observers were predicting. 217,000 new jobs were added and more people entered the workforce. The unemployment rate was unchanged, as was the participation rate. There's really also no change in part-time workers, but the number of job losses fell. So, although there was no real improvement in the quality of the labour market in the US, the relatively high level of new jobs created in May was seen as a confirming positive that the US economy is in full recovery mode. Markets reacted accordingly. Employment levels are now higher than pre-GFC. In China, their exports gained steam in May thanks to firming global demand, data showed yesterday. But an unexpected fall in imports signalled weaker domestic demand that could continue to weigh on their economy. Their trade surplus exceeded $36 billion in May. The ECB announcements on Friday, while not involving direct QE yet, will see a huge expansion of support for the bond markets. These have rallied strongly, driving EU yields much lower. A surge in liquidity is expected to flow from the negative deposit interest rate the ECB implemented. Anything that moves will get a bid. At the end of last week, in wholesale markets, there was also a very dramatic fall in credit default swap spreads across the board. For the US and Europe, they're now back to levels last seen in 2007. For Australia's banks, they're at 2010 levels. These narrowing of spreads will mean that our banks will be able to borrow new wholesale money on finer margins. In a somewhat related shift, the stock market risk volatility also declined to levels last seen in 2007 and pre-GFC as well. In New York, yields on benchmark US Treasury 10-year bonds rose to 2.6%, gold jumped $10 to $1,252 an ounce, and the oil price remained hovering in the $102, $103 range. Stocks rose across the board, with the S&P 500 nearing the 2,000 mark on its index. For New Zealand, these changes mean the cost of wholesale money in our mortgage market will stay inexpensive, despite what the RBNZ will announce on Thursday. On the exchange rate, the New Zealand dollar was largely unaffected. It starts the week at 85 US cents, at 91 Aussie cents, and the TWI is at 79.2. And it's a public holiday in Australia today. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.